John, you'll need to mute yourself. That's the one thing I forgot. Unmute yourself. That's the one thing I
Yeah, can you hear me?
Yep, that's fine. Welcome everybody to Monday Night Live. My name's Derek Arden. It's a great pleasure to have with us tonight John Goodson. John is a chartered insurance broker, and when I heard John speak at the local networking group I'm a member at, I had to rush down and get my key out to make sure that I had a 5-lever lock. I'm not sure that is a 5-lever lock or whatever. And I went around checking my window locks at that point and suddenly got very paranoid. So I thought it'd be great to invite John on to the show tonight so we could all check whether we got the right sort of insurance or know what's in our policies. John, thanks so much for joining us. Can you tell me
You're welcome, Derek.
Tell us a little bit about you and how you got into insurance.
Well, I was happily selling televisions in Aldershot in 1986 for £45 a week, which was great for beer money, but was very conscious that it really wasn't a career. And my dad met the manager of the Legal and General in Farnham in the Waverley Arms by the station there. And over a pint, an interview was organised. So before I knew it, I was in the claims department at Legal and General. And that was just ahead of the Great Storm in 1987. Which was a baptism of fire. So there I was in the claims department. People's houses were blowing down, trees going through cars, all sorts of things. And I really learned at that point, Derek, about why people take insurance, what the benefit is to people, where it goes wrong, what people's opinions are about insurance. Really learned a lot in a very short space of time. And that led me then to my apprenticeship in insurance broking at Graham Brown Insurance in Guildford. And I spent 12 years becoming a director there, and then went on to become a director with responsibility for corporate clients for one of the national firms of financial services firms. And then 16 years ago, decided to invest in a smaller independent insurance brokerage, a more consultative approach perhaps, because I think there's still a constituency out there of insurance buyers who still want advice and still want to know how to do things properly.
Yeah, and I really applaud you for that. We all want relationships, but the trouble with relationships in business, in banking, in insurance is they come with a cost, don't they? And people don't want to pay that cost. Can we talk about personal and business insurance? And I know really you mean small business insurance, because they sort of dovetail together, don't they? And
yeah, that's right. I think in terms of some of the risks.
Yeah,
I think in terms of some of the risks and the exposures, yes, a lot of the things to look out for are actually quite similar. A lot of personal insurance is bought online, and I have skin in the game on that. I'm an insurance broker, so I prefer people, I suppose, to come to me and to use a broker perhaps rather than buying online. There's it's a perfectly valid choice to buy your insurance directly. If you go on comparison websites, you'll often find de facto star ratings on there, which will tell you whether an insurance policy, a home insurance policy, for example, is of a reasonably good standard. And a policy of that type will probably be as good as the sort of insurance policy you might buy through a broker. But the key thing I think to say, Derek, is that if you purchase your insurance directly via a website or over the phone, you are making a conscious choice that you are not taking advice on that you will read everything, that you will ask questions if you find something in your statement of fact or your policy schedule which isn't right. And I think that message sometimes gets slightly lost. And I think if you're not confident in reading contracts in that way, and insurance policy is a contract just like any other, then you're probably best served by a broker.
Oh yeah, John, you raise a very interesting point there. Are you telling me that I should be reading all the contracts, like I should be reading my Apple contract that I tick or my Google contract that I tick before they let me into the system? Come on, got time for that, John.
Well, and that's part of the challenge that insurance faces. And I do get that, and I do reflect on that it's not for me to say, as a mere insurance broker and not a lawyer, that you shouldn't read all the terms and conditions on your software or on your mobile phone. But I think generally people make a choice, don't they? They make a choice that, okay, millions of people have got this software. They all have exactly the same terms and conditions. So I'm probably okay maybe to click these without reading them in detail. And that's created a culture of not reading terms and conditions, perhaps. But insurance really shouldn't be lumped in with that view. Insurance is more bespoke. The consequences of misunderstanding your insurance are very significant. You know, you may lose your home, you may lose your business. It could become very costly indeed. So, but I think there is an issue there, Derek, in that it's not easy necessarily to interpret your insurance policy. You know, some household insurance policy documents are 80 pages long. Some small business insurance documents, they could be 150 pages long. And more so than that, if you buy your car insurance and your home insurance online, very often now you're not sent your policy documents by email. You have to log in, you have to register, you have to get the code on your phone, you then have to set a password, and then your passwords don't match. And I do wonder how many people, after they've bought their insurance, do actually go to the trouble then of registering, logging in, reading their policy documents. But there are things that can trip you up if you're not careful, if you're not looking.
I was just thinking, you mentioned de facto star ratings, John. Can you just go back and just explain to everybody exactly what that is, please?
So de facto is a rating organization. I suppose you know they mirror in some way what Which do, but they boil it down to a star rating, 1 to 5. And there are certain of these websites where you can go and compare prices that will display the ratings from de facto alongside the insurance quotes. And that's quite useful. I mean, if I'm buying directly online, I don't buy the cheapest quote. I scroll through them. I look for the de facto star ratings. Look, I'm an insurance broker. I'm also reading the insurance policies as well to making sure to make sure that they're suitable. But yeah, it's it's not easy for people who are not in the insurance industry and not reading these policies day in, day out to make an informed choice.
Okay, so what you're saying there is we should be looking for a 5-star de facto rating if we go on Direct Line or people like that. Okay, got that one. Fantastic. Now, what should we be looking for when we buy house insurance and car insurance? Because you mentioned that, didn't you? There's certain things that we should look for.
Yeah, that's right. So when you're presented with your documents for your home or car insurance, you're probably receiving quite a lot these days. Regulation has been fantastic in the insurance industry and, you know, in terms of consumer protection and what that's brought. But it has also meant that you are faced with quite a lot of documents when you buy your insurances. When it comes to household and motor insurance, Derek, I would firstly point everybody to the statement of fact document or the statement of insurance document. 30 years ago, when I started, when you bought an insurance policy, you filled in an application form and you sat there and you took great care over your answers. You made considered responses because you were filling in a form and sending it off. And that's not how it works now. Very often, insurance is bought quite quickly and it's based on assumptions. And so the insurers, instead of sending you a form, they'll now send you a statement of fact document, which lists everything you told them and also assumptions that the insurer has made. And it's critically important that you read that. If you read no other document, read the statement of insurance and just challenge anything that's wrong, because otherwise the claim might not be paid or even the insurance could be invalidated. The other thing to pick out is the schedule of insurance. Clearly, that lists the specific information about your home, about your car, about your occupation, about your age. So definitely be picking up on those documents.
On my house insurance, they used to just assume it was worth a certain figure or something if you lived in a postcode. They seem to have stopped doing that now. Have they tightened up on things?
No, I don't think so. Some years ago, home insurers moved towards umbrella limits of cover. So very often you'll automatically get £1 million for your building. And part of the challenge there was that, and this is still the case with some home insurances, you're required to know how much it would it would cost to rebuild your home, including site clearance, professional fees, and all of those sorts of things. And there are online tools that can help you with that if you know the dimensions of your home. But there was so much scope for that being a problem and for claims not being paid or people becoming underinsured that many insurers just found it easier in this world of big data to say, well, look, we know on average how much it would cost to rebuild a 3-bedroom home in Plymouth or whatever it is. And so they were able to arrange policies on that basis.
There used to be a 1/3, 2/3 rule, didn't they? That if the land was
Yes,
worth,
that was never a great idea, and certainly in all the time I've been doing insurance, we've tried to debunk that. There is no relationship between how much it would cost to rebuild a home and how much it's worth on the market. Houses in some parts of the country can be bought for £1, and you go down to Sandbanks or somewhere like that, and you're paying a huge premium to be there. So no, there's no direct relationship between the two.
So what insurances, so we got small businesses on here, people that have been in business and people that are in business. What other insurances should we have? You're looking at professional indemnity insurance for me at the moment, loss of profits, liability, cyber
Yes.
insurance. You said to me there's over 100 different types of insurance.
Oh, more than 100 different types of insurance. Now, in terms of what is the most important ones to look at, it's very much, Derek, a case of horses for courses. Every business is different. What you'll often find with insurance brokers is they'll come to you with a list of insurance covers that they sell. And okay, you're this type of business, so we think you should have this type of insurance, this type of policy, etc. And actually, there's nothing wrong with that. Within that list, there's going to be some key covers that you really will need, whether it's professional indemnity, business interruption, employer's liability, whatever it might be. And I approach a new client in much the same way. I'll have an idea when I go to visit a business of the sorts of covers I'm likely to be talking to them about based on my experience. But that needs to be blended, Derek, very much with a discussion with the business owner about what keeps them awake at night and where they see the vulnerabilities in their business, because it can take you in some interesting directions. I can give you an example of that. Last week, I went to visit a manufacturing business. And they have a factory in one of the emerging economies of the world, and we were talking about that. And this person I was speaking to expressed some concern about, the possibility of his assets there being seized by the state, or maybe some sort of embargo on that particular territory, and was really quite concerned about what that might mean for his business. And that led us on to discussions about political risks insurance, which we're sort of starting to look at for them now. And, when you have those sorts of discussions, you realize that, those key risks for business, those things that do keep people awake, which might be the credit risk of a big customer, not paying or defaulting. It might be litigation around patents, something of that nature. Well, maybe it's more important to start with those covers than worrying about how much you're insuring the laptops for, or what the excess is on the motor fleet insurance. So, in my view, it is a blending of the traditional list of insurance covers that a broker will come to you with, on their sales crib sheet, alongside a discussion around fundamental risks. And every business is different. Every business will have different vulnerabilities.
Sure. Before we move on, John, I remember you telling me at the previous presentation that when you look around a business or when you look around someone's house, you look for things like dustbins where people can jump on and go over the roof and all sorts of things like that.
So that's absolutely right, and that feeds back into what you said earlier about we don't have time to read the documentation. If you're a business, particularly as opposed to an individual, but also on some home insurances as well, there will be warranties in your insurance policy. Warranties are conditions, terms in your insurance policy which set out things you have to do for your insurance to be valid. You held up your key earlier. I've got mine here. There may be a clause in your insurance policy that says you have to have a British Standard 5-lever mortise deadlock. And people say, well, what is that? Well, I can tell you, if you have that in your insurance policy, if you've got a key similar to that, they're very often brass, and it opens the door from either side rather than just one side. And if you open your door and on the side of it there's the kite mark and it says 5 levers on the side, then you've got a British Standard 5-lever mortise deadlock, which is something that insurers often insist upon. But there are shortcuts. Every business may find that it has specific clauses that relate directly to their business. And obviously they must ask their insurer, they must ask their insurance broker what they are. But also there are common clauses which apply to all businesses. Small businesses, Derek, are often slightly disadvantaged. A very large business, when it buys its insurance, it will be presented with documentation and in the negotiation phase, which lists out all of these warranties, all of the things the business must be doing. And it tends to be upfront and very apparent. Small businesses, which perhaps don't have the resource to buy the advice perhaps necessary on this, will often have a more commoditized insurance product. Years ago, insurers started commoditizing insurances for shops, for offices, for tradespeople, for that sort of thing. And that's quite nice. You get an off-the-shelf policy that does most of the insurance work that you need it to. But the disadvantage there in that commoditization is that clauses which set out things that you must do can get lost within quite a lengthy policy document. So when I go to visit a client, a new client particularly, one of the things I'm looking for various things when I walk in the door that suggest to me that nobody has pointed out to that business those clauses that they must be compliant with. And some of those are quite typical. So, for example, we talked about security. So, one of the shortcuts, one of the hacks we look for in the policy documents is minimum standard of security, or even the word deadlock. Quite useful to look for that. We'll look for alarm warranties. Is there a condition on page 30 of the policy that says you must have an alarm to a certain standard? Does it say if the alarm doesn't work, you must ring your broker by 10 a.m.? All of these sorts of things we're looking for. The bins, you mentioned the bins. It's quite common in these policies, hidden in the policy wording. It will say something like, the bins outside, the wheeled bins outside need to be 5 meters from the building. Well, that's challenging for some businesses. Not all businesses can site their bins 5 meters from the building. But nevertheless, within the policy document, that's what it says. Portable heaters as well. Insurers are not big fans of portable heaters. So if I go into a business and in the factory floor, I can see heaters with the cables trailing along, then that's a bit of a shortcut for me to know they're probably not getting the sort of advice that they perhaps need. And just to point on that, these are default warranties. So although they are hardwired into the policy wording, insurers can be pretty flexible. So they're default. If you don't know they're there, if you don't negotiate on them, then they apply by default. But if you can't put your bin 5 meters from the building because there isn't enough room, I generally find insurers are quite flexible on that, and they will have a discussion. And if you have to have portable heaters in the office, depending on what they are, yes, okay, we will have a discussion about it, and they will allow it. So going back to your earlier question about not reading the small print, it's really worth getting to grips with warranties and knowing what they are, and having a chat with whoever's providing your insurance, because these things can be bespoke a little.
Brilliant.
Electrical inspections, that's another one.
Oh yeah.
Fixed wiring. There's very often clauses about having that inspected and certified as well.
Just to reassure me, that's for businesses rather than personal insurance. Is it house insurance? Because I think I've got we might have some trailing wires in our house. But that's
well, I mean, it's good advice for all of us. But I mean, I suppose for property owners, property investors, people who let out property, you might well see clauses on electrical wiring and electrical inspections there. On home insurance, yes, there are fewer warranties, I should say. Although for some policies you will see those locks and those alarm conditions. So be very aware of those.
Okay, let's move on. Let's move on to why is insurance so expensive? Why has my car insurance doubled over the last 2 years? why is my house insurance?
Yes, I can hear the booing already from here.
I
Um,
thought somebody was having a laugh when they did that.
it's a fair question, and one we get asked quite a lot. Um, and it is true, and it's principally down to something called claims inflation. If I take an example, which is motor insurance and car insurance, we've seen this a lot with car insurance. So why is it the case that premiums are going through the roof? Well, if we think back to the pandemic, at that time, nobody was driving. Um, and what we found was that insurers were in 2021 reducing premiums. Premiums were going down for car insurance. I know people say well, insurance never goes down, but it really did. Um, and the reason for that is insurance is very sensitive to what's going on in the wider economy. Years and years ago, how car insurance went direct. And people were buying online, lots and lots of competition. You saw adverts, people saying, "Oh, we guarantee to be cheaper." You don't see adverts like that anymore. And the reason is that the car insurance market matured, the direct insurance market matured. There was too much competition. Claims were exceeding premiums generally. Insurers pulled out. And actually, there aren't that many insurers providing car insurance now. When you go on these direct websites, you'll see quite a lot of brands. But if you look behind those brands, you'll see that a lot of them are owned by a relatively small number of insurers. So capacity shrinks, and a lot of those insurers are not actually making an awful lot of money on car insurance because of the rate of competition. A lot of mainstream insurers will say, actually, in some years we make a loss on our car insurance book. Sometimes we make a modest profit. But what that means is that the scope for the margins for handling shocks in the economy or changes in the economy aren't really there, which means that when things do change, premiums are very sensitive and they do go up in line with those shocks. So the reasons they've gone up since 2020, the costs of secondhand cars have gone up. So write-off values have to go up on insurance. Delays in getting parts, supply chain issues. If you think about what's gone on in the Red Sea, delays in getting parts. Vehicles are much more complex now than even in 2020 in terms of complexity of parts, electronic parts, ECUs, those sorts of things. Labor shortages, much harder to get mechanics now. So delays in getting cars booked in. And the problem with delays with car insurance is if you hit somebody and their car can't be repaired for 7 months because you can't get the parts, you can't get the labor, that's 7 months that other party is hiring a car on credit hire. On a like-for-like basis. And so it all becomes very, very expensive. And so what we've seen is claims inflation, and that is how much more it costs an insurer to deal with a claim as opposed to last year. It has gone through the roof in the last 2 or 3 years.
Fantastic. Now you're going to tell us the same story on house insurance, aren't
And
you?
it's exactly the same story in house insurance. And what we're seeing, Derek, actually, we've seen it in the last 2 or 3 years, is that big name insurers, names that you would know, household names, are pulling out of home insurance in some cases. There's been an overcapacity, just like there was in motor insurance years and years ago. And now with rebuilding costs going through the roof, and again, difficulties in getting builders, difficulties getting trades. I've been trying to find a good electrician for a long time, and that's no different for insurers. And you're starting to see exactly what happened in motor insurance start to happen in home insurance as well. And this has been going on in business insurance as well.
Yeah. Wow. Okay. Okay. I think we got the message there. John, pretty loud and clear. Are you sure you don't work for an insurance company?
No,
Or
I don't
insurance
know.
broker?
No. I mean, they get some things wrong, but some things it really is the case. It really is true.
Let's talk about negotiating claims. Now, there's loss assessors and there's loss adjusters. I got a bit confused with the two. I'm sure everyone on here knows, but there might be a few people not understanding it. And you said if there's a fire, an ambulance chaser will turn up before the fire brigade. Not
Well,
quite.
yes. Yeah, we are to be very careful here. I didn't quite put it in those terms, but yes, that's true. So insurers generally will appoint a loss adjuster, which is usually an independent firm, not always, but it's someone who's sent out to act on the insurance company's behalf as their eyes and ears to collate the data, to report back and make a recommendation to the insurer on payment, or on the validity of the claim. A loss assessor is an independent claims negotiator that you pay for yourself. And that might be by way of a fixed fee. It might be by way of a percentage of the claim. And you'd have to be a little bit careful about that, because, if you're a factory and, you've got a £60 million claim, you could be talking about, millions of pounds in fees paid to these people to help you. Loss assessors have a value in a major significant claim. Yes, your insurance broker will help you in terms of getting the insurer, making sure the insurer acts as they should, that they pay claims when they say they should. But in terms of business recovery, a good loss assessor can be worth their weight. I've been into buildings that have just recently suffered a fire, and people are dazed and confused, and the smell is awful, and it's in your clothes. And having someone there to hold your hand and talk you through it is incredibly useful. But you're right, if we attend a major fire, very often we get there, and by the time we're there are people in white coats walking around the building because they've turned up in advance and said, "Oh, we see you've had a fire. We'll help you for 10% of the value of the claim." And what I would say is, probably best to talk to your insurance broker before you engage those people. They're likely to have a handle on which firms you should be talking to. But another point on that is that it is possible to pre-purchase what's called loss recovery insurance. And loss recovery insurance provides you with a chartered loss adjuster working for you if you have a major fire or a major property incident. And that can be a much more cost-effective way of getting that sort of help in the event of a claim.
Great. Okay, John. Last point. I read somewhere that 52% of people in Britain don't negotiate the first offer from the insurance company. Now, these are obviously personal things. I write about in my books, never accept the first offer, and yet 52% of people do. You said one of the benefits of dealing with you is you always negotiate the first offer.
Well, look, an insurance broker is always going to act on your side, and they're always going to try and get claims paid. It's not in an insurance broker's interest to have unhappy clients with claims not being paid. Yes, I mean, when I was younger, when I was serving my apprenticeship as an insurance broker, I was taught never accept the first offer. And, we just have Glass's guide and all the vehicle valuations and property valuations. And when an offer was made on a total loss, something of that nature, we would always sort of kick back on that. The secret is to get your evidence together. These days you can go on Auto Trader and see how much it would cost to replace a car that's similar to yours that's been written off. With the internet, you can very easily establish replacement costs for machinery or for household goods or that sort of thing. No, insurers are open to negotiation, and if you've got a good broker, you've already got a head start.
The trouble is, I suspect they lowball you in the first place because they expect to be negotiated, and then if people don't negotiate, they're really missing a trick and being
well, you said that. I mean,
well, I'm allowed to say that.
I don't know. I perhaps wouldn't be quite so cynical. I'm not sure it's in insurers' interests to have staff tied up in long-winded negotiations. It probably makes sense to an insurer to give a fair offer up front, but I would certainly recommend validating that offer with your own research.
Yes, I'm just John, we're nearly at the end of the interview. It's been really helpful. Will you stay on and answer any questions
I'll be happy to, yeah.
that people can have? Everybody, I've just put up John's details behind me, and I'm going to move out the way. Do you want to read them out, John, just in case anyone on here
Yes, thank you. So yes, I'm at Insurance Services Surrey. You can see our web address there, hopefully. Our telephone number, 01483 532 921. And I'm John at insurancesurrey.co.uk. And there's a very unflattering picture of me behind you.
And I think it's fantastic that you give a relationship value-added service as opposed to a transactional service that we tend to get when we buy cheap and we buy online. Congratulations on doing that, and thank you for joining Monday Night Live.
Thank
Can
you,
I
Derek.
remember the Monday Night Live to give John the usual round of applause and vote of thanks on the gallery view. John, that was
Thank you.
absolutely brilliant. John at Insurance Services Surrey.
John at insurancesurrey.co.uk.
Well, I
That's
was
me.
close. I got it the wrong way round. That's brilliant. Thank you so much, John.